Hi everyone, welcome back to Be Rich. This is our next podcast, and I hope you enjoy the last one. So, further on that line, thought we'd touch about a bit of human psychology and how it affects our decision making. Based on that, Arun has bought something which he wanted me to explain to him, and we'll try to explain it to you. So, what do you have me for?
So recently I came across a curve called Dunning-Kruger effect. So
Dunning-Kruger effect.
Yeah, it is basically for anyone into content creation. So this curve is like there will be a starting point and it will reach a peak, and then a slight bit of a correction will be there, and a slope of entitlement will be there, and it will reach the original level. So I thought this can be applied to the share market. So I compared this with we who began the share market journey after the COVID lockdown. So everyone was new to the share market. So we have seen the Nifty rise from 7,500 and until now it is moving up. So we were there during the COVID lockdown. But I want to ask you, it was the same happened during the 2008 crisis. You were there that time. So what was your experience?
Okay. First of all, Dunning-Kruger effect has two portions you should remember. It is a problem which all of us face, and it applies to everything, not only stock market. It is a human cognitive bias. Cognitive bias means you believing in something and thinking it to be true, and it may not be true. So it's basically on the notion that with limited knowledge on a subject, we imagine ourselves to be experts without knowing what the blind spots are. Everybody, including Raghuram Rajan, Anand, everybody has blind spots, right? And the reason why
if success follows, everyone
the more successful you are, the more you're prone to Dunning-Kruger effect. Because as you gain more and more knowledge, your confidence grows till suddenly you get exposed. Not to anybody, but to yourself.
So we started the journey around lockdown. The knowledge which we possess is not our knowledge. We see YouTube videos, blogs and articles.
It's not even that.
And they
you know how it started. People, lockdown started. People are still getting their salary, full salary. They're not going out, right? First, they were all nervous. They were scared. Lockdown. 2 months went. Salary is accumulating in the account. Now you're a bit confident because the world is not ending. World is not ending. Correct? You're getting a lot of free money sitting in your account. And in some countries, they're also giving money, free money. Government is giving stipend. Like in US and Europe. India was not doing much. All our RBI was doing was postponing credit card loan payments, giving some window, rather than wasn't giving free cash. In US are not even getting free cash. So that is also sitting in the account. And slowly it's accumulating. People are bored. What we do when we're bored, we start watching YouTube.
How to make easy money.
Not only YouTube, we start having Zoom calls. Then one guy will say, Macha, do you know what's happening? I invested stock market. It's low right now. All-time low. But you know history. We'll come out as lockdown probably in 6 months' time. Because we don't know how long lockdown.
We have 6 months' time, so why not?
Yes, market open up, everything will go back to normal. And then Zoom, it will go back, so quickly buy. So it started like that. So people didn't know anything about. So what are you buying, I'm buying HDFC. I'm buying Indocent. I'm buying Kakaku. I'm buying Adani, whatever. So people start dropping. Then you see it moving up a little bit. Because when a market hits rock bottom, everything goes down. Then when it starts moving up to reach normal levels, everything again will get some air into it. Right? It's like wind blowing. Even paper and the leaves will start flying up. So everything started going up. So you get a bit of confidence. Even if you bought a really stupid company, from the rock bottom, it will go up a little bit. Because everybody, money is coming back into the market. So immediately you start growing confident. Like, see, I know this. I know nothing in this. See, I bought 2 months back, I bought ABCD shares. Now they've all gone up by 5%, 2%.
In 2-3 months itself, they have seen the double bagger.
Correct. So I know what I'm doing. Now I don't need any expert. Who needs to read a book? Who needs to understand all this? Just buy.
Same thing happened with me also.
So you randomly start buying everything under the sun. There's no plan. And you'll suddenly see your portfolio, instead of having 2 stocks, 3 stocks, you'll have 20 stocks, 30 stocks. You don't even able to track what's happening.
We feel like we don't have enough money, so
So then what you'll do, go to YouTube, investing stock market. Some joker's video will come. I'm also a joker, so my video might have come. So any video would have come. You'll start reading it, and you won't listen to the whole video. You only listen to whatever you want to hear, which confirms your biases, and you start going on investing. This has been going on since COVID times. This is what happened before 2008 crisis, right? this happened in the real estate market. Like what happened in China, what's happening in India, happened in the US, where everyone thought prices of real estate will never go down. Real estate prices will only keep going.
It will be stable, but it will not come down.
Only keep going, 10%, 5%, but never come down, never crash.
Okay.
Might not go 20% or 15% in 1 year. It might go only 2%, 3%, but it will only keep on going. No. Only up, no other way to go.
So when did it start? After .com crash or?
No.
There is any timeline to that?
.com crash happened for the same reason. Instead of betting on houses, at the time they were betting on .com companies.
That is more of a stock market crash.
Yeah, that was more of a stock market. This was a real estate market crash.
Okay.
Right. Now the same thing is happening again. People are getting more and more on confidence. People underestimate experts. Like lots of comments you read about Anand's videos. Will tell Anand, oh, you know nothing. You're a bad fellow. All the time saying crash, crash, crash. Don't invest, don't invest. See, everybody's making
They're seeing only the success.
So all experts are idiots. Raghuram Rajan doesn't know anything. Anand doesn't know anything. Anyone who's worth salt doesn't know anything. They don't know what they're talking.
They give the hint that market is going to correct, but they're
out.
To them.
Everybody's out on Tom-Toms. All your Bloomberg experts, everybody's on Tom-Toms. Financial Times, you go. All your economic experts are telling you the market is overgone to too much to one extreme. What will cause this to pop, we do not know.
Okay.
Like the real estate bubble was blowing. Everyone was saying it's blowing up, it's blowing up. No one knew what will cause it to collapse, but it did. So experts said usually in the past a war made it collapse. Maybe it's the war, this war will make it collapse. It didn't collapse. The investors are immediately saying you're a fool. You said war, nothing happened. Then we said Middle East. Because in the past, in the Middle East crisis, it crashed. It didn't crash. What fool? You said Middle East, nothing happened. So everything confirms your bias. So it's fueling this overconfidence in the market right now. And what will cause it to collapse, I do not know. But it will. Because it's nature. It's like stacking cards, a building card house. After a certain point, it will start losing stability. It will have to collapse. Right now, free money is being printed and it's keeping it there. Interest rates have gone up and soaked up some of that free money. But there's so much of free money which is being printed because free money was printed for years. Right? More than 10 years free money. We've only been raising interest rates for last 1 year.
It began around 2010.
Yeah. That's when we started printing free money. Now, if Donald Trump wins again in the US, he's insisting on throwing the Fed Powell out and putting another guy in who will cut interest rate back to zero. That means more free money will come back.
Then it will fuel the stock markets again.
It'll fuel everything again. Then fuel US debt again. You're pushing everything back up again. That means the card house you're building is wobbling. So now you're telling your friend, hey, Machan, hold on to this. Hold on. You get 2-3 guys to hold on to it and keep stacking more cards. Eventually, people's hands will hurt. No holding. How long will he care about your card house? He'll remove his hand saying, I can't hold anymore. That time will really start wobbling and start look like it's going to collapse. But investors don't see it's actually people holding it, which is giving it strength.
It's not the company's growth which is giving the stock
it's all the other things which are, giving it support, like scaffolding. You remove all that, everything will fall. What will cause it to fall? How will it fall? We do not know. The consequences of the fall will be huge because the higher you go, the bigger the fall. You understand? You jump from the first floor, maybe you'll only break your legs. But you go jump from the 30th floor,
there is no chance.
God can only save you. That is why a lot of economists are scared because they do not know really which floor we have reached. Because
once they say the market is going to fall, it's rising even further.
Yeah. Because in the past, what has happened is, this has also happened where we said market is going to crash, but economic growth was also there. So the economists read it wrong. Right? Like the famous Iraq war, you're too young, but US went and told everybody, they told the world there are nuclear weapons inside Iraq, we must invade it and remove those nuclear weapons. So the whole world went on Iraq's back because US said so, and we invaded Iraq. And finally, we got rid of Saddam Hussein. We searched everywhere, there's no nuclear weapons. So it's a joke now. Anytime USA tries to say anything, warn the world about something, they shut up with another Iraqi thing you're trying to do. So same thing. In the past, economists have said there's a crash coming, but it wasn't, the crash never happened because there was economic growth. The world economy was growing. This happened after World War II. The world had not seen something like that. And it led to a lot of growth. A lot of people said there's a bubble, there's a bubble. But it wasn't a bubble because there was new growth being fueled. Then, of course, Nixon decoupled dollar, giving more dollar, more growth. So where are we really sitting, we do not know. But if you're a subject matter expert, you will find more and more experts now saying that this is unsustainable. Before it
has
was
to get
50-50.
come down.
Yeah, there was 50-50 spread. Now more and more experts, even experts who are saying, no, everything is good, are slowly saying, no, this is too much going. We need to slow down. And usually there will come recessions every 2 years. America will have a recession. And that will be like a reset. So some dampening will happen, then it will grow again. There's not been any dampening in the US. And it's very hot, the economy. So I don't know. It's going to be interesting to see what happens in the coming elections with Donald Trump.
And with Indian elections also.
Yeah, but world economy depends on the dollar, not on the Indian economy. Indian economy right now is doing well and everybody is going tom-toms about it. And India's growth is being based on what's been happening for the last 15 years. Like what's happening in the US is also growth based on last 15-20 years. There have been different presidents. You had Bill Clinton, then you had Bush, then you had Obama, then you had Trump, now you have Biden. So all those guys have been fueling this. So it's been going. Same thing is true in India. No one party, there's no one prime minister. It's been going on since the time of Narasimha Rao. Okay, like how you didn't know who Chandrasekhar was. Hopefully you know who Narasimha Rao is. So it's been going on for some time. Because it's long time ago. I don't blame you. You're a young guy. You're still learning history. So it's long ago. But this kind of growth is not usually sustainable. And I do not see it sustained for long periods of time. Because you cannot keep binging on free money. Someone has to finally pay the bill. Who's going to pay the bill? We'll have to wait and watch. So you're better off being cautious in your investing. Because you're not investing on the world economy. You're not investing on any one thing. You're investing on companies, which you're picking and choosing. So if that company is being run well, and if that company is doing good products and services, which is, you see, even during economic downturns, people still need. Then like toilet paper. Everyone in the US still uses toilet paper.
Like FMCG products.
Correct. So people still need to use shampoo, soap. So you pick a company which low debt, which is doing well, and it's a product which people always keep needing. That's why Cupid did so well. Because human beings, base nature is that, we'll need sexual protective products. So wellness products.
That was the only good company in that.
With low debt. So, and after all that family business thing got sorted out, it's been fueling. But now it's gone to one extreme. It's not worth to the point where 125 times PE. Because the earnings have to be so big for that PE to come down. If you look at the earnings, it has to grow at a tremendous percentage, like 30-40% growth year on year to bring that PE down. Because PE is nothing but price by earnings. The only way that ratio changes is either the price or the earnings. So the earnings has to inflate to match that price. I don't see it. I'd rather wait for the PE to come sensible levels. Let's say the earnings the next 2 years goes up. The PE comes down from 125 to 50. The price may not move. Realize something. When the PE is coming down and the price is not moving, earnings is going up. So that's what fueling the PE. So you may not see. That's why I'm saying don't buy it now. Because investors may not take it from 125 to 200. That's crazy. That's speculation. So it might be stuck at this level for a long time. It might not go down. It might be sitting there for the earnings to catch up. So why keep your money sitting and doing nothing? Might as well move into some other company where it's growing. When you see that PE making sense, you can move into it.
So one more question here. After we entered the market, the major fall which we saw only was during the Russian-Ukraine war. And my portfolio went down around 5 to 7%. So that time
But you should recover from that 5 to 7%.
Yeah.
And you should be plus positive now.
My question here is, we now have YouTube knowledge and other things where we can learn easily and gather the stuff and reinvest again. Back then, during your time, in 2008 and all, which was the major fall you saw and how did you learn that?
Well, 2008, we did not have YouTube. Right? We did not have so much of knowledge because these books, Warren Buffett's books and all these books, Peter Lynch books were there. But like how you did not know about it till you watched YouTube, Anand was reading it, but I hadn't started reading it. Anand was telling me to read it. I didn't believe him, like, you know, how your mind is. You just been investing and you think you know what you're doing. So when the market crashed, it was very painful. Most people who go through that kind of crash don't come back to the market. So it took me a lot of understanding to absorb my losses and say, okay, you know, let me first learn. Like what my brother was doing. And I started learning from him. I eat humble pie and take the losses. Right? And what you tend to do is, when you, which is what I did, when the market starts crashing, you panic and you sell everything. Even good things you'll throw away. Things I should have held on to, I didn't want to hold on to because I didn't know. Now I know it's all which ones are good, which ones I should have held. I don't want to mention company names. Don't ask me to mention company names because we shouldn't be mentioning it. But even they say we throw the baby out with the bathwater. Like that, even good companies, because I didn't know.
You don't know which company.
Like how you bought during COVID, you bought everything under the sun. Then when you saw Ukraine crash, you see everything crashing. So you do not know if FMCG companies are good or what. You do not know because you didn't study it. Suddenly you realize
everything.
The Dunning-Kruger effect kicks in. You're like, I don't know anything. I suddenly realize I'm not an expert.
Okay.
So you just want to cut your losses, you say, and you sell everything. If you're an expert, you will know. Okay, don't worry.
Which one to hold?
Which ones to hold? Which ones to get rid of? Which companies will be fine? And you might be like, don't worry, it's going to be all right. It's just a dip. Few years, I'm holding it for a long term. I was investing in 2008. I didn't look at it like long term, short term. I was like you, feeling the high. You put a little money in, it's going up. Oh, it's going up. Put some more money, it's going up. Suddenly the 100 rupees has become 200 rupees. I'm feeling very happy. Then when the market crashed from 200 rupees, it went down to 20 rupees. I said, oh no. That loss is even bigger because I don't see the loss from 100 rupees coming down to 20 rupees. I see the loss as I had 200 rupees and I lost. It's not, I didn't lose that.
You didn't see it as a business, but as a way of earning money.
Yeah. I was just like enjoying it, thinking I'm getting free cash. And I thought I was an expert. So all of us do. But you learn from it. So I hope from the Ukraine war, now you've learned. Now you're reading. You're studying. Same way, a lot of people now are watching Anand's channel for what reasons? Same reason, to learn. They all burnt their hands. They took loans. They did try to do option trading and burnt their hands. And now I'm coming and saying, okay, let's grow wealth. Let's not gamble. Anyway, I hope you guys enjoyed the video. I hope we got some clarity on this, on Dunning-Kruger effect and how it's related to the stock market and how it creates cognitive biases in investors like us and how to be careful about it. Do be careful when you're investing. Do know what you're doing. It's always great to have an expert giving you some advice. I know it sounds counterintuitive, but experts do help. Thanks for watching the podcast. Bye.
Thank you.